The Hang Seng, that's holding on to gains of almost 0.6%.
A mixed set of numbers coming in from Axis Bank, but more on the weaker side.
The Nifty open interest PCR has now fallen to 0.65.
The Nifty Bank, yesterday it had a weakish close, but that could provide a glimmer of hope.
We do have momentum across the markets, including, for example, America.
RBI has come down very harshly on some of these subsidiaries.
It's about 0.33% cut on the Nifty, 24,671.
We would beat our own guidance as far as top line is concerned.
If this trend continues, so we should be looking at a strong third quarter growth as well.
$1 billion is what Zomato board might approve the fundraising.
The Nifty is back above 24,700, having recovered nearly 150 points from the low.
We're investing $7 billion in modernizing British Airways, and that's well underway.
We believe it should be a good festive season, but we'll wait and watch.
We'll have to wait and watch and see if the regulator comes up with something further or not.
Well, recovery, that definitely is the theme today. We've seen a sharp recovery across the indices.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and we are looking at a very, very nice bounce from the day's lows, 300 plus points on the Nifty, and of course, much larger, 650 point bounce from the day's low for the Nifty Bank as well. So that kind of a day, holding on so far so good, and we're back at about 24,880. This is the last hour coming up. We're coming to you from the CNBC-TV18 News Online Studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, good afternoon.
Hi, afternoon. Unexpectedly good, right? Yesterday you were complaining that how, we didn't get any indications that it's going to be such a down day. And today, well, things have turned around.
Well, that's right. I think the emerging markets itself have done well today because the Shanghai market as well ended with a gain of close to around 2.5%. So maybe by the end of today, the FI figure hopefully is not as large in terms of a sell number. And maybe, in fact, the net institution number as well could be mildly positive or could be flattish, just going by, the screen that we're looking at. But it's a good day.
It's a good day. By the way, in China, I think they've announced some other measures today. There are some, I think they've cut rates for second mortgages. So there is some additional stuff with the margin, but now it's become like almost every second day, something or the other, but small stuff keeps coming, and that's keeping investors invested there. Now, for the market here, for the Nifty, in the morning, we were kind of making the point that it was looking oversold. But one was still skeptical, and one could not really say, especially because of the 200-point fall out of nowhere, which we saw yesterday, whether some of these indicators would work. One, which, for example, we discussed was, the Nifty open interest PCR, that's the put-call ratio, which had fallen to a level from which generally we've seen a bounce over the last couple of years. It's just one indication. You can look at the relative strength index, you could look at, the swing levels. So a combination of these factors was looking like it was too oversold, overdone in the very near term, and you've got that bounce. You've got a nice, decent bounce. Now, holding on and building on to these this bounce that we've seen, I think that is another matter entirely, which I think becomes a little more tricky. So what's the mood like? I mean, it's certainly not exuberant. But is it very pessimistic? It's not very pessimistic. It's just kind of wait and watch. And trading, of course, lots of earnings which are coming through. Just look at the reaction on earnings or news flow for that matter. 5, 10, 15% in some cases. So it's, a very large sort of day on both sides. It's not just sort of a reaction one time. Look at something like a polycap, 7% cut, full 7% recovery. And a few others as well, which we will talk about as we go along. But for now, I think we've bounced nicely. Hopefully, we don't fall below that October level and the 20 weekly, which is about 24,650, which we did break below in the morning. And we kind of keep our head above water. So I think that's what we can hope for as we wrap out over the next 1 hour this day and this week as well. Rima.
Though unfortunately in stocks like in Infosys, there is no recovery. Stocks are still floundering near the day's low, down close to about 4.5%. Even in names like a Manappuram Finance, that's still down 13%. City gas distribution companies, Mahanagar Gas, IGL, these stocks too are pretty much down where they were since morning. So nearly 10% gone on most of these stocks. But let's quickly run you through what's happening on the large cap screen. So on the way down, we spoke about Infosys, but outside of that, the entire FMCG pack is weak in trade. Remember, the pre-Q2 updates or even numbers from Nestle indicate weak consumer demand. Asian Paints, Britannia, Nestle, HUL, ITC. These are stocks under pressure. Tech Mahindra, which reports numbers tomorrow early in the morning, also going into its earnings a bit subdued. On the way up, Axis Bank. Axis Bank was weak going into Q2 numbers. Numbers were okay, and the stock has reacted positively. Wipro, good Q2, weak guidance, stock up 4.5%. ICICI Bank is leading from the front. HDFC Bank, which was down 1.5% in the opening, is now up close to about 0.8%. So big recovery seen in HDFC Bank. And that's one of the reasons why the Nifty Bank itself is pushing towards a 900-point rally. And auto names too have largely bounced back. So today the bounce back is led by names like an Eicher Motors, Tata Motors, but even a Bajaj Auto, which in the morning I think was down nearly 2.5%, is now pretty much flattened out, just down close to about 0.3%. But you know, the advanced decline ratio is still even steel, right? 1:1.
Well, that's right. And it's a good session, but we're not out of the woods. One will have to say that because we are seeing a bit of a bounce in today's trading session. And just one quick point about pre-positioning. For Axis Bank, if you saw yesterday's final tick and you saw the open interest built up in the final 90 minutes, it was massive. So there were a lot of shots in the system. And because of the shots in the system and nothing so negative came out of it, in fact, the numbers are pretty much okay, the stock has seen a big bounce because the shots are scampering for cover. On Infosys, the last few sessions, the way the open interest went up, the delivery-based buying as well is what we are seeing. And these numbers are not bad. The problem is there's no big positive surprise and there's nothing really great out there. And because of that, we're seeing unwinding of positions. So in both these two, it's a perfect example of pre-positioning that we're seeing on both these two stocks. The other one I'm looking at is the Nifty Bank. And at the start of today, I had made this point that if you're looking for a glimmer of hope, it could come in from the Nifty Bank. Yesterday, it ended under the 50 as well as the 100 DMA. Today, it's conquered both the 50 and the 100 DMA. And now it's very, very close. It's around 150 to around 200 points away from that 20 DMA. That comes in somewhere around the 52,400 odd mark. So we're very close to that mark. Crucial level. If the Nifty Bank can get closer to that mark, well, the bulls will feel good. And then maybe, in fact, we could see a bit of a short squeeze because as we have been mentioning, the FIs are net short on the index. In the last few minutes, we also had Hindustan Zinc's numbers that flashed for you on the screen. Looked pretty much in line on the top line on the EBITDA front as well. And the float in the market for Hindustan Zinc is only around 2.5% or thereabouts. So those numbers look quite okay. The stock hasn't done much. It's come down to around the 510 levels because the promoter entity went ahead and did some dilution a little sub those levels. So that's been in a bit of a range. Well, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, what's your take? Would you be building shorts on this sort of a bounce, or do you think we could extend this rally a little bit more, maybe towards the 25,100 odd mark?
I think the good thing, Nigel, good afternoon, is that we have managed to climb above the 24,800, 750 zone, which was an important support area. Yesterday closing was 24,750 right there. And today opening was lower, but we managed to bounce back. Now, what is the maximum which I'm looking at from this bounce back is, I think, 25,200, which is where the last two, intra pullbacks was sold into. So maybe around those levels can be revisited. And given the fact that we didn't break 24,800, 750, I think we're back to that range of 24,750 on the downside, about 25,200 on the upside. So the market continues to, show some resilience around the lower levels. That is a good thing. But till we cross 25,200, I'm not sure of a reversal. So we'll assume that we are going back into the range.
Any last hour strategies?
So I think on the stocks, banking names are looking good, and Canada Bank is something, which has made multiple lows around this 100, 102 mark. So I think we'll buy that with a stop at 101.5 and look for a pullback to about 109, 110 kind of levels on the upside. The other stock is State Bank of India. That's also, getting slightly stronger. It's now trading above yesterday's high. So buy here with the stop at 810 for targets of around 845.
Okay, got that. Let's get to Axis Bank then. That's clearly the big mover of the day on the back of the Q3 performance. Abhishek joins in with the fine print and the way forward. What brokerages expect from Axis Bank going ahead?
Well, Rima, to begin with, going into the result, the stock was down 4 to 5% over the last 1 week. Hence, post 11% underperformance to Bank Nifty in the last 3 months, Citi has closed their 90 days downside short-term view on Axis Bank. So, with respect to the results, the advances growth was 11.4% YOY, one of the weakest that you are seeing in last 12 quarters. Core operating profit declined on a sequential basis by 0.4%, which is the highest decline that you are seeing in last 5 quarters. Net interest margin came in at 8-quarter low of 3.99% versus 4.05%. In this, there was a one-off of 5 basis points over there. Treasury income that aided the bottom line. It came in at 1,111 crore, which compares to about 406 crore in the previous quarter and about 100 odd crores in the same quarter last year. So, with reference to the PNL versus our poll, the NII was a miss. However, on account of treasury gains, the PAT beat our poll. Brokerages remain bullish on the stock. They say that banks used to use the one-off gains to lift the contingency provisions over there. Core revenue, however, has remained soft for them, despite the fact that they have muted business growth this time around. They expect business momentum to gain pace in H2 FY25. So, valuation multiples of price to adjusted book value of 1.6, 1.7 on a 1-year forward basis looks very attractive. So, DAM Capital, Morgan Stanley, Nomura all have a buy and overweight rating. Target price ranging from as low as 1,360 per share to as high as 1,442 per share. Back to you.
Thank you. And what about HDFC Bank and Kotak Mahindra Bank? Big day tomorrow. In the afternoon, we should get numbers from both of them.
Well, HDFC Bank has given a highlight with reference to the business momentum, which showed that CASA ratio has declined. However, LCR, that is liquidity coverage ratio, has improved for them. Their entire focus seemed on the credit deposit ratio, which they are trying to bring it down. So the key things to watch is that the net interest margin is expected to remain almost flattish on a sequential basis, especially by Kotak Securities, Morgan Stanley, as well as Citi. Remember that in the previous quarter, the net interest margin was at 3.47%. Now, slippages are expected to remain stable. Morgan Stanley estimates a slippage of 8,000 crore versus 7,900 crore in the previous quarter. So, credit cost is expected to improve on a sequential basis. Again, Morgan Stanley estimates 9 basis point decline in credit cost on a sequential basis. Asset quality is expected to remain stable or improve on a sequential basis. Management commentary with respect to how they see the business momentum going ahead will be watched very closely. Now, our poll suggests NII growth of 9.9% and PAT growth of 1.9%. On Kotak Mahindra Bank, the focus will entirely be on the business momentum, that is the deposit growth as well as the credit growth. Net interest margin can come under pressure. Morgan Stanley estimates 27 basis point decline on a YY basis and 7 basis point on a sequential basis decline in net interest margin. So, you need to watch out for the low cost deposit momentum. Last time it was around the 43.5% in Q1 FY25. Slippages and asset quality will be seen closely. Morgan Stanley estimates slippages of 1,630 crores, which compares to 1,352 crore in the previous quarter. Again, Morgan Stanley estimates credit cost, about 75 basis point, which is up by 32 basis point on a YY basis and about 15 basis point on a sequential basis. So, management commentary and outlook will be important. And another event to watch out will be the update on the RBI ban that they have on the digital as well as unsecured lending. Our poll suggests NII growth of 11% YOY and PAT growth of 10% on a YOY basis. Back to you.
Yes, I remember just last week, I think there was this buzz about the RBI ban getting lifted in the stocks. Kotak Mahindra Bank stock had done very well. Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, joins in. Sudeep, would you go out there and buy Axis Bank, or what would be the pecking order? We're still awaiting numbers from the other three, even ICICI Bank, but Axis Bank?
Yeah, one can buy Axis Bank if somebody has a slightly longer time horizon. There is absolutely no problem. The numbers were pretty much in line with what the market was expecting. But if I have to put the order as you are asking, I think I will put HDFC at number 1, ICICI number 2, and Axis at number 3. That would be my pecking order. HDFC, we are very positive. I think, if you look at the valuation historically at what valuation HDFC was quoting vis-a-vis its peers and right now where it is, I think HDFC comes out as an attractive proposition. Of course, we'll have to wait and watch the numbers which they announce tomorrow. Same is the case for ICICI. But as far as ICICI is concerned, they have consistently, beating analyst estimate quarter on quarter for a very long time. We can expect them to continue to do very well. I think that's one business which is in a pretty solid momentum. We have to watch as far as the deposit mobilization numbers, as well as the credit growth numbers, and also the management commentary for both HDFC as well as ICICI Bank. But, if I'm looking at a long term, I think my pecking order will be HDFC, ICICI, and then Axis.
Fair enough. Let's talk about IT now. You're seeing some big moves in IT names. So on the way up, it's Wipro, and on the way down, it's Infosys and LTIMindtree. In fact, LTIMindtree has also turned negative now on a year-to-date basis. With a 6.5% fall, LTIMindtree is down in 2024. So it's given up all its gains. So it's a big laggard. Now coming to Wipro. Now Q2 was strong. The company reported a revenue beat. Margins expanded. They could absorb the wage hike impact. Their deal wins were the highest that we've seen in the last 10 quarters, at least the large deal wins. There was a bonus issue. So the street liked all that. And they're looking past the dismal Q3 guidance. Also bear in mind that Wipro is the cheapest amongst the large cap peers, trading at 23 times forward multiple, whereas in Infi, even after the correction, is closer to 26 times. And plus, since the rally began in June, Wipro has lagged a bit compared to peers like in Infosys and HCL Tech. So that's the reason why Wipro is doing very well. Infosys, the numbers were fine, absolutely fine. The Q3, the full year guidance was also in line. The stock is just retreating after running up. So since June, considering the stock had gone up nearly 40%, there's just some profits being taken off Infosys. But other than that, brokerages continue to remain bullish on Infosys. They believe the stock is best placed to ride the discretionary spending uptick. And in all the numbers, we've seen a recovery in BFSI, and the management sounding optimistic that the BFSI recovery will continue. So the brokerage view is that Infi is best placed to ride that, and therefore they would use the correction to buy. But today, after a 40% rally from June, you've seen the stock retreat a bit. Now, LTIMindtree is where you are seeing a bigger correction. The stock is down nearly 6.5%. Here again, the street was bullish because they get 35% of their revenues from BFSI. So the hope was that things, would show an uptick. But this quarter, revenue growth was lower than what they did in Q1. That's point number one, and even lower than what they had, what the street was anticipating. So there was a miss on the company's top line, even as margin performance was fairly strong. The company did guide in their interview with us that in Q3, growth rate will moderate, largely on account of furloughs and lower working days. But the BFSI momentum is still very much intact. Sudeep, so the question is that now you're not going to get any more big Qs for the next 3 months, right? We've got all the big numbers. Now you're getting into that slower quarter. So for the next 3 months, how do you expect IT stocks to, play out, pan out after the kind of rally that we've already seen?
I think one thing is pretty certain that BFSI has got a tailwind behind it. And companies having a skew or having a significant part of the business coming from BFSI will definitely benefit. We have seen that getting played out in Infosys to an extent in Infi as well. At some point of time, it's bound to play out in LTIMindtree as well. So I think this is one theme which I think will work for medium to long term. As far as Wipro is concerned, I think, the new management, Mr. Palia, he has, tried to err on the side of caution. So the guidance he gave was pretty conservative, and market probably didn't like that too much. So there was a bit of a correction post the result announcement, but the results were better, and I think things are picking up now. And I strongly believe that the guidance was really conservative. So overall, I think if I have to look at, again, a pecking order here, I would put amongst the large IT companies, Infosys on the top spot. I think they are best positioned to benefit out of the discretionary spending, BFSI spending increasing. I will probably put Wipro at number 2 at this stage. That doesn't take away anything from TCS or HCL Tech. But today, sheerly based on the valuations and where they are, I think my pecking order will be Infosys and Wipro.
Okay, got that, Sudeep. Sudeep, just a few days ago, we had discussed NALCO, and I remember we were talking about how alumina prices have been very, very strong, and that's what's going to hold NALCO in good stead. But for today, let's focus on Hindalco. It's buzzing today as Crown Holdings, who is one of Novelis' top customers, delivered their results. Now, in the past quarter, Crown has delivered 5% growth in global beverage can shipments. And as per Crown, the Brazil, Mexico, Europe and USA, all of them recorded growth of more than 5% or even more. Now, Crown Holdings' result is a positive read-through for Novelis. Remember, Novelis' Q2 numbers, well, it could be affected by the floods in Switzerland. The management has already guided that they could be hit by close to around $30 million net impact. But things can start building up for the second half of the year. That's because the UBC, or the used beverage can or scrap spreads, that has started recovering. That, in fact, is up close to around 20% in the past 2 months. It's roughly around $800 per ton. So for Q2, Novelis' EBITDA per ton could be around that $500 per ton. But it could recover to $525 per ton in Q3. And in Q4, it could further recover to around $550 per ton in Q4. So Crown Holdings, those numbers were good. It's a positive read-through for Novelis. Hopefully, the offtake is good. And because the spreads are expanding as well, Novelis could be anticipating a better recovery from Novelis in the second half of the year. Sudeep, what's your view? Metals on the whole itself have seen a big bounce today. But one of the factors that are helping Hindalco could be this. Your view on the aluminium pack, Hindalco, NALCO or Vedanta? What's the pecking order?
Nigel, I think I've been bullish. Last time when we discussed, I said I'm positive on the entire aluminium value chain, which includes NALCO, Hindalco, as well as Vedanta amongst the larger listed players. Now, specifically on Hindalco, if we have to talk, I think we have to realize one fact that globally, in multiple industries across the spectrum, I think use of aluminium is increasing in one form or the other. Whether we look at the transition from IC to EV, and the massive change in the weightage, massive change in the weightage as far as aluminium is concerned. Look at the modern gadgets. Look at the modern, the drinks. You're talking about beverage cans. Pretty much everywhere the use of aluminium is increasing, and that is a structural change which we are witnessing. Now, under these circumstances, while metals are an extremely volatile category and keeps fluctuating based on what's happening in China, how the US interest rates are moving, and a whole lot of other factors. But structurally, aluminium is on a good state and the entire value chain will benefit. That's what our belief is. If I have to pick one stock at this stage, probably, just sheer because of tactical reason, I'll pick Vedanta because the demerger is in the works, and that will, I believe, have significant value unlocking opportunity for the shareholders. Of course, you can't discount the regular dividend which the company keeps giving to ensure the ultimate holding company benefits in receiving dividend and repaying their debts. But as a shareholder, you benefit as well. So Hindalco tactically is best positioned at this stage if you have a 6 months plus kind of a view. But if you want to take a longer view, I think NALCO and Hindalco are better positioned. So amongst the three, if I have a, let's say, 1 year kind of plus horizon, I would go for Hindalco. And then after that will come NALCO and finally Vedanta. But if I have a 6 month horizon, Vedanta definitely.
I believe Mr. Agarwal as well is in town. So, we'll have to, hear some kind of sound bites maybe from what Mr. Agarwal has to say as well.
By the way, Z Entertainment, there the numbers. I was just, seeing on the screen that Z Entertainment stock price has skyrocketed. Net profit has gone up 61% on a year-on-year basis. I think even in Q1, the company had focused a lot on cost cutting, which had resulted in a margin and profit beat. And perhaps that's something that's continued even in the current quarter. Net profits up 61% to more than 200 crore rupees. And that,
but I saw some operating revenue, EBITDA is down 4%, and operating revenue is also, I thought, was a little subdued, which just came, right? So maybe
margin 16%.
16, which is better. Yeah, but the stock is completely, smashed up. So it's coming off lower levels. But yeah, I mean, for now, it's looking like a good set of numbers. On the face of it, the headline numbers seem to be much better at this point. Sudeep, we'll leave it there. Thank you very much for joining us. We'll take a break as well. Markets are right there, about 100 points. I mean, lots of other stories we want to talk about. City Gas, what's happening there. And of course, some more earnings which are expected maybe in the next couple of hours. Sridhi Bhattacharya, Edelweiss Mutual Fund will also be with us on the other side. Stay tuned.
Welcome back. City gas distribution companies are amongst the big losers today. This is on the back of the APM gas allocation cut. Sonal joins in to explain more. Sonal.
Well, all these city gas distribution stocks, they are under pressure because MGL and IGL have finally confirmed that the gas allocation has been cut by 20% to around levels of 51%. This is due to lower gas production from lower fields, gas requirement for new CGDs, and gas required by Opal's Petchem plant, that is by ONGC. They say it will adversely impact their profitability, and they are in conversations with stakeholders to ensure the impact is minimum. This will, of course, impact their earnings. So let's talk about what brokerages are making of this. Jeffrey says that assuming the shortfall is filled by imported LNG, now they will have to take imported LNG because domestic allocation is just 50%, the EBITDA per SCM will fall by around 2.3 to 3 rupees per SCM, which is around 25 to 30% of their Q1 EBITDA. They will require a 6 to 7% price hike for margin neutrality, but there could be an impact on margins and volumes because of that. They think a sector derating is likely. ICICI Securities doesn't think that there will be a sector derating because of this, but for the next 3 to 6 months, there will be margin pressure that the companies will go through. A price hike of 4.5 to 6.2 rupees per kg is needed, and if that price hike is not taken, the EPS impact for all these three companies could be anywhere between 20 to 32%, with IGL seeing the maximum impact of around 32%. But they also think that assembly elections that could limit their ability to go ahead and increase prices sharply from current levels. Morgan Stanley says that this lower allocation for cheaper domestic gas is positive for upstream players like ONGC, Oil India and GAIL. City gas players will raise prices by 5% over the next few weeks and in calibrated basis over the next few months. But they say limited impact for IGL and Gujarat Gas on the volume growth. This is a view which is different from other brokerage. They say industry volumes on CNG in terms of margins is lower for IGL. So there will not be a big impact on margins for IGL as such. And for Gujarat Gas, only 25% of the volumes are coming from CNG. So even they don't get impacted so much. The maximum impact should be seen for Mahanagar Gas. MK says ONGC will benefit because they will get higher gas allocation for Opal of around 4 MMSCMD, and this translates to 7 to 8% of ONGC's standalone gas production, and higher gas prices could also raise EPS by 2% annually, and this will be a structural benefit for them. So different views coming in from brokerages on city gas companies now.
That Maharashtra point, Sonal, thank you very much for that. The Maharashtra election point is interesting, but I think I'm not sure how much it will limit, but if it limits more MGL, I'm assuming Mahanagar Gas, which operates, of course, here in Mumbai. Tridi Bhattacharya is with us. He's president and CIO of equities at Edelweiss Mutual Fund. Trideep, do you own any of the names, IGL, MGL, Gujarat Gas? And is it a bit excessive? 10%, 12% cuts today. What's your sense?
Yeah, I think, first of all, thank you for having me on your show. I mean, as the proximity to elections, as you pointed out, is one of the drivers, but also I think this shows the pricing reforms that were due to happen is finally flowing through. Fortunately, we have none of these. We are actually we hold some of the upstream companies in the oil and gas segment, and in general being underweight the oil and gas space. So by and large, our portfolios are relatively have escaped unscathed from today's price move, if you may say so.
Hi Trideep, good afternoon and good to see you. I think a couple of your portfolios are tilted towards private sector banks. Their time has come, you believe?
So clearly, valuations are in their favor, and that one sector which has actually kind of not done particularly well in the past. So we would and hence they are rallying on the back of this. But actually, what we find is financials, particularly which will benefit from potential global rate cuts and in a rate cut regime, would actually stand to do better if you take a slightly longer term view of the 12 to 18 months time frame. The expectations heading into the results for banks were on the lower side, and against that, the numbers that have come so far are just about a tad better. So I think a mixed, and that's the reaction that you are seeing in the share prices today. I mean, more generally, this result season has been more about where expectations were pegged at and how the results turned out to be, more than in absolute terms. You can see the case in IT and in the positive direction, and in negative direction, some of the stocks which had high expectations priced in.
What about Bajaj Auto? It's a part of, I think, your FlexiCap fund. It makes it to some of your funds. What did you make of the kind of, what the management had to say about the festive demand? Some people believe the comments are a bit misconstrued and therefore they would use the opportunity to go out there and buy it if you have a longer term view. How would you approach Bajaj Auto and what we've seen?
Yeah, so I think this is what I meant heading into this result season. Two-wheelers in the context of autos had done particularly well. And some of the stocks were quoting at meaningful valuation premium. And hence, on the back of that, when their comments on festive season weren't particularly taken constructively in the context of the street, and all the premium that the stock enjoyed got taken away in the course of a day. However, it is a little Bajaj Auto specific, given that it is factual number. Two-wheelers as a pack would still continue to do well relative to the autos, and hence, given this opportunity, we have taken advantage to probably add to two-wheeler sector in general. But within that, we are mindful of which stocks we go for.
By the way, the other pack is this entire wire and cable pack, which generally is lower. Polycab spoke with us today. It's staged a very smart rebound. KEI, I think, still under pressure. Havells there as well. Amongst this sort of pack. Again, I mean, the context is that all these stocks have done so well, right? That's essentially the backdrop. Do you own any view here?
Yeah, so I think we own some of the stocks that you mentioned. Can't get stock specific though, but I would say that fundamentally speaking, things are headed in the right direction. It's a question of where the expectations got to. I think the expectations with regards to margins, particularly, despite companies' guidance of being in a narrow range, went ahead of themselves. And hence, in this quarter, whether you look at all the three companies that you talked about as they reported, they talked about commodity pricing related margin impact, and hence the shares took a knock. But what we draw comfort from is that if you look at the wire and cables component of their revenues, that did quite well in high double-digit growth rate. That means that the underlying economic momentum is in the right direction. The commodity price movements take a bit of time to flow through the financials as they are passed on, and hence will come through in subsequent stages. So structurally, we are positive in wire and cables segment from a medium-term standpoint. The stocks have done phenomenally well. Opportunities like these are actually welcome for investors like us to increase our positions in the right ones.
All right, Trideep, what are you making of the two big IPOs that have been announced? One is Hyundai and then the other one is Vare. On Hyundai, people are a little skeptical whether or not it will get subscribed. It did get subscribed. Do you think it's a case that could play out, that it could have a subdued listing and then, the stock could do well from there? Unlike what we saw with Bajaj Housing, that had a blockbuster listing and the stock has come off from there. Any view on the Hyundai IPO as well as Vare? So much of excitement about solar modules, solar cells as well, and it appears the companies have a bit of a runway. How much of it is in the price is the issue? Your take.
Yeah. So my sense is investing is actually better done once staying out of excitement. With regard to some of the auto stocks which are getting listed, we have a fairly comparable stock which are in the listed domain, have been listed for a couple of decades, which are quoting at a meaningful discount. We generally tend to take a more deep-rooted view with regards to these things, as to if there are better alternatives available in the markets which are listed where we have the track record, we tend to go with them rather than live with the excitement. Again, on the renewable energy side, we are looking for cleaner plays, so to speak, to take exposure. And again, some of the IPOs that you mentioned are coming through in that domain, particularly make it interesting. I can't get stock specific here, but I think all of these, the 2 points that I would make to your viewers is that while these are new areas, I think cash flows and valuations are 2 parts that we look carefully. In renewable companies, the companies that make cash flows are the one that we are more positive on. And valuations, if we find a listed company which has been there for a good while versus a new IPO, we would tend to stick with the old war horses, because they seem to have seen few more wars.
Okay, Trideep, thank you very much for joining in. It's time now to get to our D Street chat, and Nimesh is standing by with an insight into what dealing rooms are saying. Nimesh.
I remind a smart pullback, but again, it looks like it's a pullback from very oversold levels. Need to see whether this can sustain. And there is a question mark on the sustainability only because there is very aggressive FI selling for the last many days. Even today, I understand the FIs are better sellers. The buy sell is close to 1:2 on the sell side. So that, again, the data would be quite interesting as to how the flows have been from the large institutions. I think what's fighting for the bull is the bank, if the Nifty bank index up 1.5%. But again, it will have a big impact on Monday because HDFC Bank and Kotak Bank will report the Q2 earnings over the weekend. So that will have a big impact on the Nifty Bank as well. On the other side, you've seen some bit of profit booking in IT names, but again, understandably so, the stocks have rallied pretty hard before the earnings, so a bit of profit booking there. But I guess, the momentum clearly seems to be on the downside. Yes, we have seen a bit of a pullback, but the question is, can it sustain?
No, absolutely. Nimesh, in terms of individual names, what are you picking up?
Well, so the first stock on my list today is Gujarat Fluoro. Well, the stock is down today, but off late you've seen a big rally in that name. It was part of my charter list a couple of weeks back as well. I understand the company is very close to now raising funds in the subsidiary business, which is the battery chemical business. There, I believe, fundraising is going to happen very soon. So that's something to track in Gujarat Fluoro. The second stock is Nicto Tiles. It's locked at 5% upper circuit, been buzzing in the last couple of days. There is a large block, nearly 3.5% equity got changed hands in today's market. I understand that it was a clean out trade from a leading ARC. They were having a large chunk. The final 3.5% got sold today. And additionally, I understand the company is very close to raising funds via preferential issue very soon. So that's the trigger in Nitco Tiles. The third stock is Manappuram Finance. We've been saying since morning the stock is reacting pretty hard on the downside, down almost 15% in intraday. But we've seen a bit of a small recovery. While from an institutional point of view, there is very aggressive selling. But I understand some HNI investors have nibbled a bit at lower levels in Manappuram Finance today. And the last is Kotak Mahindra Bank. I'm highlighting this because the earnings are tomorrow, and just one day before the earnings, I understand there is very aggressive selling at leading FI. So expect delivery-based selling in Kotak Bank today.
Nimesh, this Gujarat Fluoro, I think you'd mentioned earlier as well, right?
Yes.
The share price has run up sharply. I mean, from 3,500 to 4,600. So the chemical battery business is going to be spun off and investors brought in. Any idea what kind of investors, what valuation, etc.?
Well, Prashant, I don't know whether it will be spun off. It's a 100% subsidiary of Gujarat Fluoro right now. They may still raise the money in the subsidiary business itself, which is the battery chemical business. I'm told the valuation that this business will get from some market investors is close to around 25,000 crores. The current market cap of Gujarat Fluoro is 50,000 crores. So half of the market cap they're deriving from this battery chemical business itself. The indication is that maybe the company is going to raise close to 2,500 crores, 2,400 to 2,500 crores at a valuation of close to 25,000 crores at a enterprise value. So it could be a significant deal. The fact that it's 100% subsidiary and they're unlocking value. But you rightly pointed out, Prashant, since last time when I highlighted this, the stock has already rallied $1,000 odd. So whether you'll see a bit of a sell on news rally, not too sure. But from a value unlocking point of view, they are going to raise close to 2,500 crores. In terms of investors, I understand a large sovereign fund is one of the key investors there. A couple of big family offices are going to put in money into the battery business. So market names are coming in. Valuations is good, but need to see whether whether it happens to be selling news at least in the short term. But a good value unlocking in the battery chemical business.
Okay, thank you very much for that. By the way, names like SJVN and Inox are surging in trade. There's a sudden spike in these two names in very large volumes. Look at Inox. It's almost approaching 1 crore share in terms of traded volumes. And Motilal Oswal has been a big mover, 11% up today and 27% up this week. So in a weak market or volatile, weakish market, Motilal Oswal continues to see buying. Get into a break. On the other side, as always, we'll get you a few BTST calls. Maybe you can take it for the weekend.
Okay, welcome back. There's 15 minutes to go for market closing. Mitesh is with us with what you should be doing for buy today, sell tomorrow, or sell today and buy tomorrow, buy on Monday trades. Mitesh, what's on your radar?
So, Prashant, I have in fact two buy calls, the BTSC as you rightly said. Z, I think, post the numbers has given a very strong reversal. This level I have also bought it today, so there is vested interest in a small quantity. At a price of 132, 132.5, I would recommend a short-term trading buy with a stop at 129 for targets of 140, maybe in good case scenario, even 150. And BTST kind of a position on Bata, which is reversing after a long underperformance. Today has given some kind of a breakout on the short-term charts. So Bata is a BTST with a stop at 14.55 or just below it, 50 paisa below it, and look for a target of 14.85.
Thank you very much for that. We'll try and get more color on the financials of Z Entertainment, but the stock is higher in trade. Now, Polycab deserves mention because it opened straight away with a cut of about 7 to 8%, and now the stock has flattened out. There was a conference call at 12 o'clock. Upasana joins in with some of the key takeaways which could have resulted in this intraday recovery.
Well, Polycab has reported mixed set of numbers. Revenue was above estimates while PAT was in line, and it was a big miss on the margin front. But management commentary remains quite upbeat. Management is confident of achieving 20,000 crore revenue by end of FY25, which was targeted by FY26 earlier. It has also guided EBITDA margin range between 12 to 14% for FY25, and the management expects export contribution to revenue to increase to 8 to 10%, which is currently around 6.5%. It says that the FMEG will continue to deliver some losses this year, but the management expects it to turn positive by FY26. Well, company has also highlighted that first time in many quarters, wires growth has outpaced the cable growth. The growth in wire segment was 2x the growth seen in cable segment. The volume growth for wire is around 20 to 25%, while that of cable is early teens is what was seen in Q2. Now, company says that it has participated in government tenders for optic fiber worth 50,000 crores, and the company expects order finalization soon to happen going forward. Company has also highlighted that it has optical fiber manufacturing capacity, contribution of which is very low right now.
Right, well, the stock has moved into the green as we speak. Thanks a lot for that, Upasana. Sudeep, you want to come in on this one?
As Polycaps is concerned, I think the margin is a challenge. We did see that same thing pretty much in Havells. So I think, the entire industry has got into a position where the volumes have been decent, but the margins are under pressure. But the commentary in both the cases have been good. We do expect post-monsoon a lot of construction and business activity to pick up and gather momentum in the second half of the current fiscal. So I would not really worry too much about the margin slippage in both the companies. And I'll wait and watch what happens in H2 of the current fiscal. The volume sales growth for both the companies is quite reassuring. Let's wait and watch.
Okay, wait and watch is the call on this one. Sudeep, any comment on these recyclers, Gravita, Ganesh, Ecosphere? They have done very, very well. I think